Another day of trading over on Wall Street. The Dow Jones was relatively flat today after falling earlier this morning. It closed the day down 154 points.
The Nasdaq and S&P 500 had similar days. The S&P 500 closed down 0.22%. The Nasdaq remained unchanged from Monday. Rebecca Walser is the president of Walser Wealth Management. She joins us now for more on this. Hi there, Rebecca. Thanks very much for joining us. So what was driving the market today?
Well, we're looking at the Fed and we're seeing how they're acting in Jackson Hole, and we're looking at their minutes and we're seeing that they're on the one hand saying that they want to raise rates potentially in September, but they'll look at inflation. Yet at the same time, their minutes are saying maybe they won't raise rates. So the market is just really trying to figure out where this Fed is going to go. And it really is determinative at this point. If they really stop and change course and stop raising rates, i.e. another interest rate hike next September, they're afraid the world is not going to believe that the dollar will remain stable and strong, which is right now where the world believes the dollar is stable and is strong because the Fed has taken such decisive action so far. But if they pivot and change course and become more dovish, then while the market will like that, investors will believe that the Fed's not really taking inflation seriously, and that could lead to much bigger consequences of the dollar not really being stable and strong.
Well, and we also know markets, of course, hate uncertainty even more than they hate either of the options. Rebecca,
right.
I want to zoom out a little bit because earlier this summer, it looked like the markets were experiencing a bit of a rally. But over the last 2 days, they've really been dropping. Do you think that this is the start of another sell-off?
Yeah, I think that the rally, we call it in the parlance, something called a dead cat bounce. Or if you look at, and I hate to say this to the end users at home, but I wanted the viewers to know, if you look at really bad in recessionary times, 2008, the global financial crisis, we call it in America, the Great Recession. If you go back to the dot-com crash, you do have a period of recovery. Sometimes even for a month, we had a great July. It was a great recovery month. And this is a phenomenon that we've seen before when we really do have massive recession or even depressions coming, that we see a month of recovery before we ultimately get to a 40 or 50% downward trend. And I'm not saying that's what's going to happen. I'm just saying that we do have a history of this exact thing happening.
I want to turn to another metric. The latest report shows new home sales dropped dramatically in July. They're down 12.6% from June. Rebecca, what does this tell us about the housing market as a whole?
Yeah, and they were off 26.6% and, almost a 30% drop in June over, from the previous month, and now an additional 12.6% drop from June to July. So this is totally expected. What's happening is right now our 30-year national average mortgage rate is 3.5 or 3.73%, depending on, the day it swings back and forth a little bit. But it's, 5.73. So sorry, not 3. That's what I'm used to the last
Right.
10 years.
I was going to say
3%. That would be nice. I'm sure there's a lot of people who would like that.
That's the problem, that we've gone from the 3s. We're hovering below the 6s, but we're in the 5.7, 5.6 range. And the problem is, if you could afford a $400,000 house with a 3%, with almost 6%, you're going to get a lot less house for the same monthly payment, with a lot more of that monthly payment going to interest instead of the house payment. So what's happening is that's making a lot of people walk away from deals. That's making our home starts come down immensely. People are moving over into the rental column. We know that we don't have enough rental units. We've always had a rental problem and a lag there. So then rents are going up too much. Then people have to move out further. Those rents are going up. So we are seeing not only the housing market be, decimated by these interest rates, but that leads to higher rent because they go to rent, and that means there's more demand for rent. So then rent goes up, and then people have to move out even further from where they really want to live because they have to get somewhere where they can actually afford it. So all around, this is really crushing to everyone's housing expense, whether they're renting or they're buying.
It really has been such a dramatic shift to watch in the housing and the rental markets. You're right. Rebecca Walser. Rebecca, thanks very much for your insight. We appreciate it.
Thank you.